Welcome back. You're tuned into Inside Out. Well, the stock on our Spotlight segment today is Alicon Castalloy. Well, the company is one of the leading integrated manufacturers of aluminium casting in India. They amalgamate the best of European engineering, Japanese quality, and Indian ingenuity and frugality to serve a diversified customer base across sectors such as autos, infrastructure, aerospace, and defense. The company offers end-to-end solutions spanning the entire spectrum of aluminium casting needed across multiple user industries and enjoys global presence across facilities in India as well as in Europe. Well, they have a diversified base and no single customer contributes more than 15% of a turnover and are also present across markets and industries. Now, that provides a natural hedge. The financial performance has been improving as well, and in the past quarter, they delivered the highest ever quarterly revenues with margins improving. Well, the margin improvement has been aided by focus on value engineering, refined product mix, and cost optimization efforts, and would have been closer to around 14% if adjusted for a non-cash charge on account of ESOP scheme. Well, bulk of the revenues are from the auto space, and India contributes to around 72% of the entire revenue mix. Well, they have strategically reduced their contribution coming in from the two-wheeler segment, whose contribution is now down to around 42%, as they've increased their focus on four-wheelers, EVs, as well as exports. Now, there is clear validation of them moving up the value chain, as they've started supplying a complex part to Toyota, which is the hybrid cylinder head. And the management says that this is the first time in the history of Toyota that they've outsourced the cylinder head. Remember, Toyota's quality is one of the most stringent in the auto industry. Well, in the past quarter, they've also commenced the initial product supplies of the e-axle housing, that's to JLR. Well, during the past quarter, Alicon booked orders aggregating around 680 crores. And with this, their total new order booking has reached around 9,000 crores, which is executable over the next 6 years. Well, EVs contribute a third of the total order booked, and exports will contribute to a higher proportion of revenues, as it's now half of its order booking. Well, in terms of guidance, they aim to achieve revenues of around 2,200 crores. That translates into a CAGR of around 16% growth over the next 3 years. And the company has been focusing on reducing its low-margin businesses and increasing profitability. And they have guided for margins of around 14%, with ROCE around 20%. Well, let's wind this down with the shareholding pattern. As you can see, the promoter entity, well, they are the largest holder in the company. You have a Japanese company that holds close to around 14% stake in the company, and some marquee funds as well hold the remaining stake. In terms of valuations, they have some cushion because in comparison to its peers on a forward basis, well, Alicon trades at a bit of a discount in comparison to its peer set. Well, with that, it's a wrap on this edition of Inside Out. Thanks a lot for watching. You do keep writing to us. We'll try to feature some of the companies that you want to understand on the show. Thanks a lot for watching.